Asian markets extended its as signs of easing US-China tensions lifted investor sentiment. The Shanghai Composite Index climbed up 0.7% to 3,605, and that's the highest close since January 2022. In Hong Kong, the Hang Seng Index added 0.5% to 25,667. That's the highest close since November 2021. Japan's Nikkei index gained 1.6% to 41,826. The S&P 500 notched a record high close on Wednesday, lifted by Nvidia and GE Vernova. This is the European Union and the US appeared headed towards a trade deal similar to that struck with Japan. The benchmark S&P 500's now climbed about 8% in 2025. The S&P 500 gained 0.8% to end at 6,358, while the Nasdaq Composite gained 0.61% to 21,020, and the Dow Jones Industrial Average rose just over 1% to 45,010. The All-Share Index down 0.1% at 100,033. The Rand's at 17.56 to the dollar, 20.66 to the euro, and 23.82 to the pound. On to commodities now. Gold's trading at $3,362 an ounce. Platinum's at $1,396 an ounce. And Brent crude oil's at $69.22 a barrel. Well, not too much going on in the markets news today, but a few points to discuss. Our markets analyst, Mohammed Wagley, portfolio manager at Sasfin Wealth, joins us now. Good afternoon, Mohammed.
Good afternoon, Julie. It's always a pleasure to be on.
Let's begin with some company news, and Anglo-American releasing its production report for Q2. Another strong quarter in copper and iron ore, both tracking to guidance. What's produced these strong performances for these two commodities?
Thanks, Juliet. So it's a bit of an interesting one. I think for Anglos, we should probably just give a little bit of context first, and that is, the company is actively trying to sort of streamline, focus their operations more on copper. So to see them do well from a copper perspective on a month-on-month basis has been pretty good. But the one thing I should note is if I look at that number on a year-on-year basis, they've actually fallen about 13%. So if we just sort of strip out everything before 2025, yes, it is looking good, but they are coming off somewhat low bases. So good news, or relatively good news, on the copper front. Where we're seeing a bit of softness, though, is the diamonds. And we saw a bit of a decline there. In fact, a bit is an understatement. There was a 26% fall in rough diamonds. The demand there has been quite weak, and within the context of them actively looking to sell their beers, it does seem like that might be more and more of a tough ask. So could be implications for movements there. But yeah, I think the numbers also painted a picture of them streamlining their business. They're pretty much out of platinum. It looks like they've got agreements on the nickel and coal front. So what will be left going into the second half of the year is a much more focused operation. But, I said the numbers were sort of mixed. And I think on the positive front, we did see some massive growth in manganese. They were also coming off low bases, but it was I think a case of production almost doubling. So some good news on that front. You had mentioned iron ore as well earlier, and we had seen some muted growth there, I think in line with expectations. But broadly speaking, these numbers were quite mixed. And if I look at the share price reaction, the last time I checked, they were down about 0.78%. So that's pretty much more in line with what I would have expected looking into the numbers. It's not too much of a change, I would say. The company's still probably well positioned going into the second half of the year, but other than that, not too much to write home about.
And then there was that announcement that India's Natco Pharma is set to acquire all remaining ordinary shares in the Adcock Ingram group. How have the markets reacted to that?
So this is an interesting one. I would say this was probably the big headline, at least from a local company specific news yesterday. Now, essentially what's happening is that Natco is trying to buy out all the minority shareholders of Adcock Ingram, and they're looking to do that at an offer of 75 Rand per share. Now, this, if it goes through, would give them a 36% stake in Adcock, and that does, in my mind, represent quite good value, relative to what the share price was at. So upon news of the acquisition coming out, the share actually jumped about 20 odd percent, which was great to see. But I think practically speaking, what this means if it does go through is that Bidvest will retain their majority stake of, I think it's about 65%, and the company will then delist and operate as a private company. And so why Natco wants a bit of exposure here is, I think first and foremost, they don't have too much exposure in South Africa. Adcock Ingram, I think almost the entirety of their revenues are South Africa based, so they can take advantage of the existing infrastructure and things like that over there. So that does make sense. Whether or not this goes through remains to be seen, but it does look, again, attractive at current prices. I assume if it doesn't go through at this price, I don't imagine there'll be too much incentive from Natco's perspective to come back with another one. So let's see what the shareholders say, but it's likely that this one will go through.
And then lastly, Google's search engine has released its results. How's the tech company been impacted by AI search engines like ChatGPT and then, of course, X's Grok?
Yeah. Oh, okay. So quite interesting. I think the big concern is pretty much for the reasons that you described, was that we'd see quite a bit of softness on the search engine side, which is a massive, if not the biggest part of Alphabet, Google's revenues, right? And what we saw was relatively muted losses in that respect. I think people were expecting to see a little bit more of a decline there, and that's not to say that trend doesn't exist. I think that is still likely to carry on. But what was quite encouraging here was to see how much Google was spending on infrastructure, a lot of that AI infrastructure as well. And I think the picture that they painted was that, the company is actually very well positioned to monetize on that excessive is probably not a fair word, but extremely high spend. They're quite well positioned to monetize that, and maybe that represents an attractive growth vector, perhaps not a new growth vector, but I think perhaps the market wasn't factoring in, to what extent these guys would be able to monetize that. So overall, a good picture for Google, and it seems that they continue to be well positioned going forward.
Thank you so much for your insights. That was Mohammed Wagley, Portfolio Manager at Saswin Wealth.